Welcome to This Week in Mining, where we talk about how to make money in the mining and metal sector. My name is Jay Martin. I'm excited to be here with my buddy and guest, Andy Schectman. Andy, it's great to have you on, man. Looking forward to this.
Jay, thanks for having me, dude. Yeah, absolutely. So am I. Always looking forward to being on with you. It's a pleasure to be here.
So we got to talk about the gold price. Let's start there. Because there's a lot of people that watch my show, the Jay Martin show, this show, that come to my conference, that watch your content, who've been waiting for this rally. And I kind of chuckle a little bit when I look at all of the commentary surrounding a breakout like this, because suddenly gold is like headline news on NBC and Yahoo Finance and all over the place. And everyone's adding logic to it. They're saying, oh, it's because of this most recent outbreak of conflict. Oh, it's because of the economic turmoil, as if any of that stuff is brand new as of a couple months ago. So when you watch this, like, do you try to add meaning to the rally, or are you just like, it was a matter of time based on X, Y, Z, and this is happening now, and it could have happened in 6 months or 6 months ago, but how do you process price action? Because I imagine you're getting asked a lot.
Yeah, that's a good question. I mean, look, you have record low participation in the retail sector right now. The U.S. I mean, they've been selling into this rally. If you take a look at the amount of gold, I think it's like $8 billion that have come out of the ETFs. It's a 45-degree angle downward in terms of United States participation in the rally. You look at the amount of gold eagles that the U.S. Mint has sold, it's like the lowest amount since 2019. And I can tell you in this industry, look, we added 14,000 clients in 45 days when Silicon Valley Bank failed and Signature Bank failed. It's nothing like that right now. We see a lot of larger orders by people who are concerned, usually in this case, much older people who are concerned what they see happening in the US. But largely, this is being ignored by the mainstream investor in the United States. And what I see happening in reality, if I were to be completely forthright, it's that the bond market in the United States, which, look, we see 10-year treasury yields moving up and the bond prices, moving down, and that inversion, that correlation, if you will, between interest rates and gold. Well, if rates are so high where you can get 5.5% on the 6-month treasury with no risk, supposedly, well, it should be the death knell for gold. With the strong dollar, and even assuming we believe the CPI numbers, positive real return in yields, it should be the death knell for gold, but it's not, and it continues to march higher. To me, what it represents is two things. Number one, we know that the central banks have bought more gold than ever before over the last 3 years, and it continues unabated, largely led by China and India and Russia and all of these BRICS countries that continue to accumulate metal. But I think it's also really a bigger issue. You got our brain dead Treasury Secretary Janet Yellen going into Brazil, in the backyard of BRICS, in the backyard of Russia, and publicly in Brazil, of all places, 3 weeks ago, saying, it's not enough to sanction the Russian assets. We need to confiscate them to use to fund the Ukrainian effort. And now she's going as far in an interview she just did on CNBC the other night, saying, we're okay with China having a relationship with Russia. Well, thank you, Janet. That's nice of you to say that. But that if they try at all to help aid in funding in any way, shape, or form Russia with their war machine, that now she's willing to sanction not just the Chinese banks and corporations, but also the Chinese government. And what I see happening is a situation where, if you look from 2000 to where we are now, for the last 25 years, the bond market has massively outpaced. In fact, it's outpaced really everything other than cryptocurrencies, which started from zero. But it's outpaced the bond market by a massive multiple, and it's outpaced the S&P 500 by a few percent, averaging about 9% per year compounding. But the key to it is that it does not have default risk, and it does not have sanction and confiscation risk. And what I see happening on large scale are these countries that are not only, before we see some form of common settlement currency coming out of the BRICS, they are using their local currencies to trade, and they are replacing the bond market, which has these issues of confiscation and sanctioning in a very hypocritical way. It's okay for us to help the Ukraine, but China can't help their ally in the BRICS Russia. I mean, we can, but you can't. We're going to sanction you otherwise. That's not going over well in the rest of the world. And I think these countries largely are shedding treasuries and replacing it with gold, which has a better track record. You know, you look at a treasury, a debt of another country, has about that big of a history as being an asset in you know the history of the world, and yet gold has a 5,000-year history, outliving 2 world wars and German hyperinflation and the Great Depression and every pandemic and on and on and on. But it does not have sanction risk. It does not have default risk. And in the case of what's being proposed to Russia, it doesn't have confiscation risk. This is the central banks that are buying, and they don't care about the positive real return. They don't care about or yield. They don't care about a strong dollar. They just want the gold. And I think that's what this is about. They are, I think, on a drive to replace the treasury holdings in a large degree with gold. And I think it's being remonetized all across the globe. Just hasn't really happened here in North America yet. But across the globe, a lot, especially in the Southern Hemisphere, Jay, these countries look at gold as a way to balance trade and to be able to enact cross-border trade without the fear and the sanction risk of the U.S. government, who they view as completely hypocritical.
I want to talk about that sanction risk, and I'm glad you brought that up. First of all, shout out to Gray Fox in the live chat, telling people to hit the like button. I appreciate that. Look, we are live right now, so if you guys have questions, hit us up in the live chat. Hit the like button, hit subscribe, turn on notifications. We're here every Wednesday at 2 p.m. PST, 5 p.m. EST. So Andy, you saw this news about as of April 13th, was it nickel, copper, and aluminum, Russian copper, nickel, and aluminum are now sanctioned, not available for sale into the global market, which obviously, so here's my question, right? Prohibition has never worked. Call it sanctions, call it whatever you want. It's prohibition. It's a policy that has never worked, right? Why would it work this time? And when you ban the trade of Russian metals, are you not just forcing non-US dollar trade, or incentivizing it is a better word? Because obviously that metal is going to find a home in China super fast, probably at a discount, and purchased in yuan instead. And so we see these sanctions get laid out, and I'm like, what am I missing here? Either it's really is that short-sighted of a policy, or there's a bigger game at stake that maybe I'm still trying to figure out. What's your take on that?
The bigger game could be it's too stupid to be stupid, that it's planned. I mean,
Yeah.
How stupid do you need to be to go around the world and sanction? And you know, how many people know that the London Metals Exchange was purchased by the Chinese? They own it. And the London Metals Exchange is the platform that trades all of those commodities, the base metals. And so I'm sure they're still beholden to the rules and regulations of the London Metals Exchange, but they own it. And now they're going to warehouse metals traded on the LME in China. And look, we sanctioned Russia, and their currency was maybe the best performing currency of all in you know the last year or two, as the sanctions have had virtually little to no effect. And you're right, when these countries, like for example, Brazil is the second largest exporter of corn in the world. They are selling corn and soybeans to China for yuan, which is immediately convertible into gold. Or excuse me, for yuan, which is then immediately convertible into gold on the Shanghai Gold Exchange. What is gold? It's the only other tier 1 reserve asset, according to the Bank of International Settlements. Who's been buying it all? Oh yeah, it's those guys. So when you're right, when Iran sells oil to China, in you know they're sanctioned, they're not supposed to do that. Or when Russia sells their metals to China, not supposed to do that. They'll receive yuan and can immediately convert it into gold on the Shanghai Gold Exchange if they desire. It is just incentivizing a greater and greater exodus from using the U.S. dollar as settlement and putting those excess reserves in treasuries. In fact, you know, it's probably the dumbest thing we could do if we really did want to retain the world reserve status, which, by the way, the lead economic advisor in the United States White House, the government, Jared Bernstein, his main thesis is the loss of the reserve status. It's a privilege we can no longer afford, according to him. And what better way to do it than to weaponize the dollar, to go green, which is the linchpin of the dollar hegemony, the relationship with OPEC and Saudi Arabia, and then start sanctioning everyone and incentivizing them to find alternatives to the current system. And that's exactly what we're seeing happen in real time.
Now, you mentioned the central bank gold buying. That's been a key theme for the last 2 years. And I think they've been purchasing like 25 to 27% of annual mine production, like a huge amount, just for context. Is the impact of that, Andy, 2 years later, maybe a reinforced floor on the gold price? And I guess like why I'm asking is because I'm expecting a gold correction. Like typically that's maybe the only thing I feel super confident about in terms of this gold market, because nothing goes up in a straight line. And to think that it would is foolish, right? So I know what's going to happen. Gold will run for however long it runs, then it will correct. And when it corrects, Twitter's going to go bonkers, calling off the market and saying it's over, all this stuff, because nothing goes up in a straight line. But if you're a long-term value investor like myself and like most of my audience, you don't sweat the small stuff, right? We're not investing for this quarter, right? We're playing a longer game. What's your take on the impact of the massive accumulation of central bank gold buying to the point of a quarter of annual production? It's a huge amount.
Yeah.
And has that reinforced the floor?
I think it reinforces the floor tremendously, because I truly do believe that it is the way that these countries view their escape from the Western dominance. I mean, I want to read to you something that was written in May of 2014 by the chairman of the Shanghai Gold Exchange. It says, the Shanghai gold will change the current gold market with its consumed in the East but priced in the West arrangement. When China has the right to speak in the international gold market, the true price will be revealed. And so what you are seeing here is an understanding of the suppression. And even maybe more important than that, I just want to read you one other thing. I've talked for almost 4 years about the BRICS and about all of this stuff happening. And what really scares me, Jay, is that it is happening. It's been happening faster than I had anticipated. And I was saying this when no one was, and I had the courage to say it. I also have the courage to say I was right. And I talked a lot, largely because of a man named Sergei Glaziev. He's a finance minister for Russia, who has told us that they will issue a common settlement currency at some point, and that it will be a basket, two baskets, one of the local currencies. We've known that. One of commodities, and largely gold, because it's tier one. We know that. And that to me is always underscored, that and the BIS reclassifying it tier one after 75 years of it just being dollars, that, yeah, this is going to happen. This is all stuff we knew. And I said it would be a digital currency, marrying blockchain and gold. And indeed, that's exactly what he says. It will be in a digital form, just like the Project M Bridge, which is their way of transacting cross-border payments digitally without using the SWIFT system. We saw the first ever gold cross-border payment system using Chinese yuan recently, using Project M Bridge. Anyways, all of this is nothing new. But here's the part that I want people to listen to. And this is the part that answers your question, I think, in a different way. And he says, the second part is price. He says, for the moment, price is determined by Western speculation. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. He says, during COVID, the price of oil fell to nearly zero. Now, we know that's off. It was negative 40 per barrel due to the massive leverage that you get on COMEX. But here's the interesting part. He says, it's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. And here it is right here. Price formation with this new currency should get rid of the Western exchanges of commodities. In other words, they are using the suppression of the paper price, and we all believe that the price has to get hammered down, because it has continually for my whole career. And the strength that this is exhibiting is tremendous. And I guess when you talk about, where is the top in gold? Could it correct? Part of me says, yeah, of course, because it always has. And I echo your sentiment. Part of me says, well, is there really a top for hard assets in fiat terms? Do you want to be the last person or the last country holding dollars when they are on the way out? And, I get a lot of dollar bulls and people who have recency bias who will push back against this. And I get it. It doesn't have to be a common settlement currency to disrupt the system. All of these countries are trading in local currencies and using gold instead of treasuries to put their reserves into. And if that really is the case, and we see this huge amount of buying, where in Asia on the Shanghai Gold Exchange, you're seeing a $3 premium on silver right now, and I don't know, $40, $50, $60 premium on gold, arbitrage sheet turning up. These countries want the gold. They don't care about the positive real return. They don't care about the strong dollar. They just want out of the Western system. and putting a floor under gold. How high it goes, I don't know, but I wouldn't be surprised to see it run a whole lot higher before we see that ultimate correction, because markets do need to breathe. But is this a new system? Are things a little bit different right now? Honestly, I hate to say that because you're usually wrong when you say this time it's different, but honestly, it feels a little different to me right now than it ever has before in my entire 34-year career.
Yeah, yeah. And I guess when I say correction, I think about a short-term or temporary pullback. You pose the question, how high could it go in fiat? And I agree with you. There is no ceiling. If you're a student of history, you will see that's always been the case. And just the last few hundred years, the last 600 years, we've seen we're on our fifth world reserve currency, right? Inside of 600 years. And where did the other four go, right? Like, the sterling's still around, but it's been massively debased. The dollar's next in line, and the tailor, right? The Dutch tailor is long gone, and et cetera, et cetera. And this is the cycle of currencies. But
right,
when it comes to present day buying, we talked about central bank purchases over the last couple of years. That hasn't really slowed down. We're now seeing I would say tremendous retail purchases through vehicles like Costco, for example, right? And you can speak to what you're seeing on your end. What about institutional investment, Andy? Like, who do you think are the key drivers right now? Who's still on the sidelines? And do you have any thoughts on how this may change over the near term?
I mean, if you take a look at the ETFs, it's falling at a 45-degree angle as the price is going higher. So the institutions have been right there along with the Nvidia crowd and the Bitcoin crowd, and then there's a lot that have been just resting their money, earning 5+% in short-term treasuries. All of that I get. I mean, the run up in AI and the run up in Bitcoin has been spectacular, and the safety found in short-term treasuries after 20 years of no interest rates at all, that's taken a lot of money out of the system. The institutional investor in the US is ignoring gold and silver completely. Take a look at the US mint numbers on Gold Eagles, and it's the lowest amount they've sold since 2019. So we have seen a lot of very large purchases. Not Look, like I said, we added 14,000 clients when Silicon Bank failed, and right now we're not seeing the massive public run into gold. Like our mutual friend Rick Rule always says that there's a 0.5% allocation across the entire financial matrix, from Joe and Jane Sixpack to the Harvard Endowment Fund. If he's right, and it sure seems that way to me. I mean, look at the ETFs going straight down in terms of people are selling. Now, when I said that to Bill Holter, my friend, he said, well, a lot of that is the big money using share redemption out of the ETFs to take possession in an opaque manner, not as transparent as it is if they stood for delivery on COMEX. And he's right to a degree. But what I see is the public in mass largely ignoring this, including the institutionals. And again, I don't mean to sound like a broken record, but to me, this is the big sovereign wealth funds and the central banks that are holding this market up in and of themselves, it's a huge contrarian indicator when you realize the American public is asleep at the switch and the price keeps going higher. Yet you read articles that the Chinese public is on a massive buying spree. So, where does it all go? I don't know, but I do think that the American public will be late to the party because they're really in large representation. They're not there right now, but a lot of older folks, 70s and 80s, very wealthy, coming to us and saying, I cannot stand what I see happening in this country. It's not the country I remember. The lawlessness, the open borders, the question on elections, the question on judicial system, all of this stuff was never, ever a part of the American fabric. And all of a sudden, lo and behold, it is. I'm out. I don't like what I see. And we have a lot of very large orders, but not the number of orders and the numbers in participation that one would expect at all-time highs in gold. In fact, quite to the contrary, it's eerily muted. And I think that is a contrarian indicator when you talk about where this could really go once the public jumps in, and we're not there yet.
So the American public is my audience, Andy. That's the majority of people who watch my show. Let's talk to them then. So at least people that watch this show aren't late to the party. Couple questions. One from Jake asking about, well, let's just talk about entry points here. So, what might you recommend to somebody who doesn't have any exposure to physical? And there's a couple questions in the chat just for context about American Silver Eagles and junk silver inventories. But what would you say to somebody who's building their physical portfolio?
I think silver's the value of a generation. I mean, I do. You got all the folks in Canada now trying to petition Ottawa to change it from industrial to a strategic metal. You have when I was at your conference, Jay, and I've been saying this a lot. 2 years ago, I spoke at your conference and I made the statement that there's 500 ounces of silver in a Tomahawk cruise missile. And a man came up to me after, and he was there again this year. I saw him, but last year he said, I've been involved in the Tomahawk program. In fact, after I came home, he sent me this, and he said, I actually helped design the Tomahawk missile. And he said, I'm not sure about that amount. I'll get back to you. He was at your conference again this year, which everyone should check out. It's really one of the only two conferences I go to. In fact, there are only two. It's yours and Rick Rule's down here in Boca. And he said to me, you were right. I'll be damned that there's between 400 and 500 ounces, or I think he said 15 and 16 or 14 and 15 kilos of silver in every Tomahawk. And yet all of this military applications, all the military applications are not listed in the Silver Institute's numbers. And, if there's 500 ounces in one Tomahawk cruise missile, think of all the missiles that are flying all over the place and ask yourself, is that maybe the reason why you have a couple of commercial banks short the way they are, naked short, to the tune of almost 1 billion ounces, Bank of America, in silver? I mean, how dumb is that? It's as dumb as a mud wall when you see India importing almost 500 million ounces in the last 2.5 years. And we have commercial banks that are naked short. So when you talk about opportunity, to me, the real opportunity on every metric, on every level, is in silver. And with, I don't know, over half of the United States, the states in the country having passed legislation or have in front of their state legislature now to call legal tender coins currency for all debts, public and private, including paying your property tax. I think there's an awful lot to be said for the American Eagle. It would be my number one choice, but only second, a very close second would be the Canadian Maple Leaf. I think in the end, it's about the number of ounces that matter, and you want to get as much as you can. But these states are proving that the form in which it is in is relevant too. You get more silver buying rounds or bars, but you don't have the utility or potential transactional ability that you would find in the U.S. if you ignore things like junk silver, which would be dimes, quarters, half dollars minted prior to 65, or silver eagles or maple leafs. Most of these states read any legal tender coin issued by a sovereign mint. So it would be the Canadian Mint or the Australian Mint. It doesn't matter. A few of them focus on the U.S. Eagle. And I guess living in the States, that would be my top choice. But I would say if, value-wise, the Maple Leaf's a better value at a couple dollars less per ounce. Either way, I don't think you can go wrong. So yeah, I think silver's the value. And ultimately, when the music stops, however, I think the place largely to be is gold. There is no other reason that the most sophisticated and influential bank on the planet, the Bank of International Settlements, would have reclassified gold as the only other tier 1 reserve asset on the planet if they didn't have big things in store for it. And realizing there's a 90% correlation in movement for all of history between the two, silver will probably outperform gold. And it's too hard for me to ignore. If I had one trade and only one trade to make, I'm buying gold. And I know there are a lot of people who will disagree with that. If I had two, I would buy copious amounts of silver. And when the ratio, which is 85 to 1-ish right now, all it had to do is hit its 200-year average of 42 to 1. It's a double. It's coming out of the ground, according to our mutual friend Keith Newmeyer, at 7 to 1. It's the value, it's the trade of a generation. It's a calculated speculation. But if I were just going to be asked by people in the States, what do I buy? If I had my choice, I would buy 1 ounce American Eagle gold, 1 ounce American Eagle silver, and you will never, ever have a problem with liquidity or flexibility. So those would be my number one choices, followed by those coins issued by the RCM, the Royal Canadian Mint.
Yeah. Okay. Got it. And I want to pull on one thread that you mentioned there. Did you say, I knew that many states are now accepting minted coins as legal tender. How many roughly, Andy, do you know, in the US?
I think it's 24, 25. I mean, it's a growing list.
So like
I mean,
half.
last I checked, I mean, I can ramble off a bunch of them. Texas and Utah, and Nevada and Wyoming and Alaska and Idaho and Missouri and Kansas and North Carolina has it in front of the legislature. Arkansas. I mean, it's a growing list, and I think it's something that speaks to the American spirit, pushing back against the ridiculous monetary policy of the Fed and the irresponsible fiscal policy of the government, where we're addicted to spending and we're broke and we're insolvent. And by taking and holding U.S. dollars that are depreciating, they tell us they're only falling by 3.5% annualized. We know that's not true. John Williams of Shadow Stats would say, no, it's more like 11 or 12%. And he just uses the metrics by which they used to measure inflation. So any way you look at it, holding dollars is a losing proposition. And so I think these states are saying, hey, let's give our constituents a fair chance here. And I never thought I'd see it, but it is happening indeed.
I'm surprised that doesn't get more press, to be honest with you. I thought it was like 12. So it's essentially half the country, more or less. There are states that
I
are
mean,
now
and some
accepting.
of these are in the infant stages, talking about it, proposing
Right.
it,
Right.
new
Okay.
legislation. Some are further along than others, but it's a growing trend for sure.
Yeah. Okay. No, I appreciate that context. All right. Uh, just because you mentioned it, I have to ask. You said it's aligned with the American spirit, and I loved that statement, Andy. Um, what are your thoughts? This is a bit esoteric, but what are your thoughts on the American spirit today? And if you were to step back and look at the American empire from a 10,000-foot view, where are we landing here? Every empire has a beginning, a middle, and an end, right? And it's hard to call where you're at in that cycle. If you look at like the British Empire at the end of the 18th century, like late 1700s, it looked like it was game over, right? They were losing the American colonies, and all the industry that came with that almost bankrupted the British East India Company as a consequence. And they owed so much money to the British government because the British government funded their private military and conquests. But if they went under, then the British government would go under. So they deemed them too big to fail, and essentially, validated their opium conquest through China to keep them afloat. Inflation was 30% in Britain in 1800. We lost our minds about 9% recently. It would have been very easy to count them out. End of 18th century, the Dutch, the Spanish, the French were picking off colonies. It wasn't looking good, right? So you could have said this is the sunset years of the British Empire. It absolutely wasn't, right? Not yet. Still had another good 150 years in them. What's your take on the American Empire today?
I mean, I could say it's overstretched and over indebted in the state of terminal decline. We have $155 trillion or so in debt, 34 trillion on the balance sheet, 77 trillion alone in Social Security, Medicare, Medicaid, government military pensions. Trillion seconds ago was 31,688 years ago. And all of the misgivings of the way that we handle the world reserve currency, the way that we have weaponized the dollar, the way that we have signed an executive order to go green, incentivizing Saudi Arabia and the rest of OPEC to align with a new growing group, that we could get past all of that if this country was still the country I remembered as a little kid, where you respected your teachers and the policemen, and there was no lawlessness in cities where you were afraid to walk from your hotel to a restaurant in San Francisco or New York at 9 o'clock at night, where all people entered this country from somewhere else, but did it the right way. There's 12 million people who've entered this country illegally, and people have sailed from Cuba on rafts tied together with strings to find justice, to find liberty, to find freedom, and walk from Central America, not in the millions that we see, but over the last, however many years. And they've done so to come to a country that embraced, liberty as an example, or justice, the justice system being blind, and Lady Liberty holding the scales of justice blindfolded. And do people really think that the Justice Department shouldn't be questioned regarding a two-tier status, or the electoral system? Are there people out there who are wondering, is it fair? Was it really fair last time? I'm not casting any anything on either side here, but I think the perception is that the Justice Department has two tiers, that the electoral system is flawed, that we are a country that is broke and insolvent. We're not a united country anymore. Everyone's at each other's throats. It's black and white and red and blue and rich and poor and vaccine and no vaccine. We have open borders that are literally, it's almost an invasion. 12 million people. If 3% of them have bad intentions, that's 360,000 people. That's a standing army. There were people last night on the news in New York chanting "Death to America." I mean, where the hell are they saying this from? So when you talk about lawlessness, when you talk about wokeness, when you talk about cancel culture, where if you don't agree with me, the hell with you. When you talk about all of these things on top of questioning the electoral system, the Justice Department, all of the things that made this country special, that's not lost on the rest of the world. And when I look at it, I think it only frightens me more and makes me feel this is too stupid to be stupid. Take a step back, as you say, weaponize the dollar, sign an executive order to go green. The linchpin of the hegemony is the protection of the Saudi kingdom and by extension, OPEC. But we're going green, so don't worry. And if you're not aligned ideologically with us, we're going to confiscate your assets. And then you let this country go to hell in a way that, that's why I'm getting from everyone who's my age or older, like what's going on in this country. I don't trust anything anymore. I don't trust the banks. I don't trust the election. I don't trust the political system. That's stuff you never heard before. And, I wish I had a better outlook on things. Look, I'm the least likely character to have ever succeeded, Jay. My dad's middle name is Miles, and his best friend who lent us 60 grand to start this business in a one-room office the size of a closet in 1989. His middle name was Franklin. And we come from nothing. I am the embodiment of the American dream, but I wonder, is that dream still alive? Is it vibrant? Is it out there for people? I don't know. And I don't like what I see. In fact, to me, that's more depressing than anything I see, either financially or geopolitically. It is what we have allowed to happen to this great country, where I don't know how you fix it, really, to be honest with you. But change has to happen, or it's only going to get worse from here.
Well, aligned with Ray Dalio's cycle of empire, the three characteristics you always see during the declining years, and you saw this in Portugal, Spain, Holland, Britain, and you tell me if you've seen it today, but it's essentially the insolvency of the state, massive monetary expansion in order to paper over the losses, because we've promised the public so much that we can no longer afford. Production's down, costs are up, so we expand the money supply to pay for everything that we have promised people. The second two are internal conflict, and this is a society that, in response to number one, right, when you expand the monetary supply, you massively increase wealth disparity and the wealth gap, and that creates this disenfranchised population who says, what the hell is going on here? Like, I played by all the rules, but I went to school, I took out the student loan that was recommended to me, but now I'm 30 and I got nothing, and that person's a multimillionaire. Obviously they cheated. What did they do, right? And you create enemies and you start looking for problems. And if you look for problems hard enough, you'll find them, whether they exist or not. And you end up in this scenario where the public just can't get along about anything, and small issues become big issues, et cetera, et cetera. But the third piece that you need is, you can have the insolvency, you can have the internal conflict, but you need the external competitor. You need somebody who's powerful enough to raise their hand and tell the world, look, they've lost the plot here. We can carry the torch from here on out. Trade under our rules moving forward, et cetera. There's usually a war that marks that transition. We're kind of maybe there, but here's something though. When you say half of the states in America are now accepting, minted coins as legal tender, that to me that's the American spirit. I'm like, that's what makes me bullish on America, is the sovereignty of the states, is that it's the only country that I know of that lacks the extent of federal overreach that you see everywhere else in the world. You still have the ability for the states to be somewhat entrepreneurial and fight for what they believe is right. And in Canada, we have that to an extent. It's actually much more similar than people understand, but our federal creep has gone way further right now. And so in response, we're now seeing 3 provinces in Canada, Alberta, Saskatchewan, and Manitoba, put forward legislature to push back on this. Alberta led the way with the Alberta Sovereignty Act, and Saskatchewan, the Saskatchewan First Act, but this is to push the federal government out of their policy and out of their borders of the provinces. And the media are calling these like separatist acts and all this stuff. But in reality, they're just reclaiming their constitutional rights. But, you know, I look at that in the States and I'm like, it gives me a big vote of confidence, to be honest with you. And my family's dual, right? Like we're American Canadian. And I'm bullish American, man. It's like rough times and it's really hard to see that, right? But I just look around the world and I say, well, what are the alternatives? You know, and have we come back from worse? And you could argue that in some cultural aspects we have, right? If you look at the political unrest in like the 60s and 70s, I mean, massive riots, political leaders were assassinated, like it got real bad. We came back from that stronger. Looks pretty dark right now. Sometimes it's darkest before the dawn. Sometimes it's darkest before everything goes pitch black. I don't know which we're in right now, but I'm bullish, man.
I love your optimism, dude. And, you know, one of the things that I really hate is being a buzzkill. I mean, I've always been a very, very happy-go-lucky guy. My parents were basically hippies. I grew up in a very, you know, easygoing, happy-go-lucky home. You know, half the time it smelled like weed because that was just what it was back then. I'm all about, you know, I'm all about the American spirit. I really am. And letting people be who they are. I don't care who you are, where you came from, or what you believe in. You know, if it's not imposed upon me, we can be friends. I get it. It's all good. And I say that so you understand where I'm coming from. And I am a product of this country and all of the benefits that and the opportunities that were afforded to me. I thank God every day, and it is the best of the bunch. But it is very, very, very much off the tracks right now, and we are heading to a place that I don't recognize anymore. So I appreciate your optimism, and oftentimes I find myself apologizing on shows for feeling the way that I do and being candid about it. It really is. I am distraught over what has happened, and I hope that the American spirit. I hope this country can find unity where we're all Americans more than anything, rather than being classified. And you know, you look at the way that they've done things here, where it's not equal opportunity. It seems, you know, where everyone has the same opportunity. No, it's not. It's not about merit any longer. It's about, you know, gender, or it's about race, or it's about, you know, sexual preference, or whatever it may be. These things have never been part of the fabric of this country. And that's why ultimately we were united, because it doesn't matter if you were born in the inner city or on a farm or in the suburbs, you all had equal opportunity if you worked hard. And I think those are some of the things that have kind of gone wayward. So yeah, I hope you're right. I got 3 kids, man. My youngest is 16, and I would love nothing more than to rekindle the happy-go-lucky spirit that I've always had, because I have been a little bit of a buzzkill the last few years because I don't like what I see. I hope you're right, and I hope that I'm wrong. I hope I'm wrong on everything I see, and I say that publicly. I hope I'm wrong. What frightens me more and makes me a little bit more cynical is that everything that I've talked about, by and large, on I don't know, over 3,500 videos in the past 4 years, has been largely true, coming true and accelerating. So yeah, I'll never give up hope. I am an optimist. This country is an optimistic country, always has been, but we definitely need a little bit of a veering off the path that we're on. And remember, we're all Americans, and join together in unity rather than all this divisiveness we see. And that's got to be step number 1, in my opinion.
100%. And we just had a surge of new people come in. Welcome, guys. This is This Week in Mining. We talk about how to make money in the metals and mining sector every Wednesday. We're live right now. So you hit up that live chat, ask us some questions. I'll get to them. Hit us up. We're here every week, Wednesday, 2 p.m. Pacific, 5 p.m. Eastern time. Hit that subscribe and turn on notifications to make sure you don't miss an episode. I'm here with Andy Schectman today, and I'm stoked that you're here, Andy. So here's you just outlined a great case for owning physical. And I don't just want to make it seem like we're talking our book here, because obviously I have a bias. I mean, I have a silver shell right behind me. I own more gold than I do silver, just from a storage standpoint. It just makes more sense to me. But the utility, when people ask, why do I own gold? And they'll say things like, it does nothing, you know, and then they'll compare it to the Bitcoin price, which has never made sense to me, because the whole purpose for me owning gold is that it does nothing. I mean, that's the purpose of a safe haven asset class. You want it to be stable, not volatile. So the argument's so backwards, but nonetheless, it's ever present. But what it does for me is give me confidence. It's like that tool in your back pocket that you hope you'll never need, but in the event that you need it, you know you've got it, right? And this is kind of barbaric, but I'll even compare it to when I was like in my teens. I was a really small kid. I got picked on a lot. Didn't have it that bad, but I had it bad enough. I had a target on my back for some reason. And my mom put me in boxing, and I learned how to fight. And I never became an aggressive person. Actually, when I learned how to fight, I became less aggressive. And it took me years later to sort of process why, but I figured out how to defend myself, and I figured out that I could give it right as hard as people were trying to bring it to me. And having physical confidence made me relax. Like now in the face of a confrontation, I wouldn't be reactive and acting out of fear and short-term thinking and all this, because I knew I was like, I can probably handle myself here. Whatever this guy is, thinking, I'm probably going to be all right. Because I train, right? Like I train for this now. So I became patient and relaxed, and that made me more thoughtful and just smarter in the face of a crisis. Now, investment portfolios are exactly the same, right? That insurance policy in your back pocket is the ability to be calm in a crisis when things get chaotic, whether it's currency markets or equities, and everybody starts panicking and fear buying and panic selling and all this stuff. You can sit back if you have an insurance policy of physical, that stable asset that does nothing, but protects purchasing power remarkably well, and just be patient and watch the chaos spill out, read the room, and decide your next step, consciously, right? Not out of panic and fear. And that is the utility. If people say, what does gold do? I'm like, it gives me patience, right? To know that whatever happens, I'm going to be okay, because an ounce of gold bought you a luxury suit in the 1920s. It buys you a luxury suit today. That is the definition of retaining purchasing power. And because I have that insurance policy, I can sit back and watch chaos calmly, right? And that's the utility for me. Do you have any thoughts on that approach, Andy?
100%. I mean, the best gift I've ever been given in my life was when I was 19, 20 years old, and I started this company with my father, and he told me there'll be one rule or I'll fire you, just one rule. All right, I can deal with that, Dad. What's that one rule? And he says, you'll buy something, gold or silver, every 2 weeks, period. I've owned the company outright for 2 decades. It's not going to fire me anymore. But I've honored my promise to him. And because of that, I have looked at my metal not as an investment. To me, it's wealth that has outlived everything the world has ever thrown at it, from wars to inflation to depressions to pandemics, everything. And it is of tremendous comfort to me. And there are very few things that, not to mention, that you can leave for your children or your grandchildren or a charity or whatever, that has intrinsic and sentimental value. It has lasted the test of time. And in every single metric I could give you, when you talk about it retaining its purchasing power, sure. In back when you mentioned in the 20s, that was a $20 gold piece. That was $20. That's right here, $20 back then. And this $20 certificate, which, by the way, a gold certificate, the difference between it and a $20 bill is that it says payable to the bearer on demand in gold coin. They were excluded, that you could interchangeable. But yeah, that ounce of gold right now, $20 doesn't even buy you a tie, but that ounce of gold right now, 2,400, buys you a damn nice suit and everything else that you need along with it. I mean, you can compare the price of a home in 1960 of $17,000, according to the Census Bureau, and an ounce of gold was $39. And so if you take 17,000 divided by $39, you end up with, and this is to all the people who say it doesn't pay interest, that's 436 ounces, basically. So your grandfather left you 436 ounces of gold back then, or your father did, to your parents, and they're saying, well, should we buy this house with the gold that Dad left us, or should we stick it under our mattress and take out a mortgage? Okay, let's take out a mortgage. And so those 436 ounces of gold have been sitting under your parents' mattress for the last 60 years, earning nothing but dust. And, that the price of the house in the United States right now, the average price is probably 400,000, the mean price, right in that neighborhood. And the price of gold right now is 2,400, almost 2,400 an ounce, 23 and change. So those 435 ounces times 2350, well, that's $1.2 million. that buys you all 1,022,000. That buys you almost 3 houses. And so not only, and it's earned no interest for 60 years. So it retains its purchasing power, sometimes even accelerates your purchasing power, and it doesn't do anything. You're right. But in the world of negative real interest rates, I mean, I don't care that we're being told interest rates are 5%. When you factor in real inflation, which they're lying about because it's an inflationary system. They have to inflate or they default. So in that environment where they lie about inflation, and we know, look, the U.S. Postal Service just raised the price of a stamp by 10%, but inflation's 3%. I don't think so. Inflation's a whole hell of a lot higher. Go to McDonald's once and tell me inflation's at 3%. Go buy some food. Go buy anything but a TV or a electronic and tell me inflation's at 3%. It ain't. So in an environment where inflation is way higher than interest rates and you're getting negative real return on this stuff, an asset that pays no interest but keeps up with the inflation or the debasement of the currency is a whole hell of a lot better than an asset that pays a negative real return in dollars. So look, to me, gold and silver are wealth, period. And it does give me comfort. It is like understanding how to fight if provoked. It gives you calm because you know that, all of the other things that you call investments or that we call stocks or mining shares or treasuries or real estate, whatever, no matter what happens, that gold will never go to zero, ever. And I think you have a better chance of being ripped off by the system than you do someone coming into your home thinking you have gold. And that's, that is as clear as I can be on it. To me, it's wealth. It ain't an investment. And it does give me and evidently gives you peace of mind as well.
100%. Now, somebody in the live chat here said, yeah, but for the average person, gold is like unobtainium. I guess given the price, I get where you're coming from here, which is, I just thought it was timely that you mentioned your strategy. You bought something, gold or silver, every 2 weeks, because often I think people look at maybe just the price of gold or the price of silver for sure and say, for me to own a meaningful amount is going to take way too much money that I don't have. Back to playing a long game, right? Life is long. And we may live through some massive conflict and disruption here, but we're going to be around a long time. Dollar cost averaging in is how I've purchased all of my physical gold and silver. I've never just gone in and bought like a crazy bulk order. I just haven't done it. Not that I just haven't. Like I've been very similar to your strategy there. I've slowly accumulated over time, and I look at it as a buy only asset. And then maybe you don't own what you want tomorrow, but over time, suddenly you're like, I actually have like a real insurance policy. I got a moat right there, right around whatever kind of castle I live in. But it happens over time. And walk me through
That's
your
allowing
business.
the laws of compounding, in this case of time, to work on your behalf. And cost averaging is the only way to smooth out uncertainty. And silver, I don't care how unobtainium gold is, and I don't mean to disregard anyone's position in life financially, but everyone can afford 1 ounce of silver every time they get paid. And it takes a lot longer buying 1 ounce of silver, but so what? You do what you can, the best you can. And it's just like anything. It's like working out or dieting or training to learn how to box. You got to be methodical. You got to be regimented and methodical and pay yourself first. As my buddy and your buddy Robert Kiyosaki always says, the only way to get off, it's the only way to get out of get out of the rat race, get off the wheel, is to pay yourself first and be methodical. And that is the only way to do it. And to me, it's amazing because I still feel like I'm 20 in my head. I showed you my tattoo that I got in Amsterdam. I mean, I don't know, any rational 53-year-old probably wouldn't be partying in Amsterdam and at 11 o'clock at night go get a tattoo. I did because I still feel that way, in my mind. But you wake up one morning and holy crap, you're 53 years old. And, it's amazing what the compounding of time over 30 years can actually amount to, even in small quantities. So that's what I would suggest to anyone is start somewhere. If you're going to work out and start building your muscles, you got to start somewhere. So start somewhere, be regimented, be methodical, and always remember to pay yourself first, because there's always a reason to not. But you too will wake up one day and say, geez, I've gotten a lot older. Let the compounding of time work for you instead of against you. And that's how you get out of the way of, being not accumulating enough assets as you get older.
So for anybody who's going to walk down that path, Andy, there's a handful of ways to get exposure to gold, right? You could look at buying, contracts and paper gold, physical gold, take possession, store it somewhere. Um, what would you recommend to somebody who's like, okay, I get what you're saying. I need exposure. I want to build a plan today. I understand this is a lifelong pursuit. Um, how should I go about acquiring? Just give some counsel to anybody there, please.
No, just, any major company that has a good reputation, or make relation with your local coin dealer. Go in and just, every 2 weeks, buy a couple of ounces of silver. Do the very best you can. Buy a tenth of an ounce of gold, a 1/10 ounce gold eagle or gold maple leaf. If you find yourself in a position where you only have the ability to buy things that are paper for whatever reason, you have a brokerage account and you really can't move it. Well, in your neck of the woods, Eric Sprott is the finest and the most well-known and trusted name in precious metals in terms of PHYS and PSLV, the Sprott trusts. I've worked with Rick Rule and with Eric for a very long time. They're above reproach in terms of trust. That's one way to do it. Put a small portion of your assets in mining shares, which are massively undervalued right now. Now that's more leveraged and more speculative, and that's more after you have the base of your physical position. But there are lots of ways to do it. There is no right or wrong way to do it. There is no established protocol or set criteria. It's just do it when you can, when you have extra money, and look at it not as an investment. At least the mining shares are an investment to me, but the physical, not so much. It's wealth. It's there when you need it. And if not, it's the best way to pass money on to your children that carry sentimental value for sure, and a hell of a lot of intrinsic value that, as we have shown, you go all the way back to, the 1900s, early 1900s, and it retains its value. And in some cases, even outpaces the best of investments. So you go back to 2000, you take Bitcoin out of the equation, and there is not an asset on the planet that has outperformed gold. And so that's an asset paying no interest. It's the tortoise, not the hare. It just slowly and methodically continues to keep pace with the debasement of the currencies underneath it. And other than the US dollar has done much better in other currencies, it's the inordinate and, I would argue, unjustified strength of a bankrupt country and its currency that mutes gold's real value. But look, it's been at all-time highs against most of the currencies of the world long before it hit all-time highs in the dollar, doing what it's supposed to do. And that is exactly that, retain its value. So to me, not an investment, just a way to trade paper dollars for gold dollars that have been for 5,000 years viewed as wealth. And I don't mean to be trite. I don't mean to, I'm dead serious on that. To me, it's just plain and simple wealth. And everything I've learned in 34 years pays homage to that.
Well, you hit on a few things there. I want to follow up on. Well, you mentioned, first of all, anybody can afford a piece of their income invested in savings, right? And you're right. Actually, I'll quote Rick Rule on this because he's got the best quote. What is it? Your savings rate is just the gap between your ego and your income. But if your ego is bigger than your income, then yeah, it's tough. So you got to moderate that.
This is a dude that, it was a centimillionaire. And the last time I saw him in California before he moved to Washington, he was driving a I don't know how old Prius. I mean, and the guy could afford, the biggest Rolls Royce that they make. That's exactly what he's talking about, as a matter of fact.
So at the show that I hosted in Vancouver in January, you were there, Rick was there. I put all you guys up in a pretty nice 5-star hotel right across from the convention center. I bumped into Rick on the morning of the conference, and he's walking from the Fairmont Pacific room over to the food court in the mall. And I was like, where are you going, man? He's like, oh, I'm going to go get breakfast. It's like, oh, they have great breakfast at the Fairmont. Yeah, he's like, I'm not paying those prices. I can get breakfast for $8 right here. Exactly what you said, guy's worth 9 figures, and he's walking over to the food court to save $16 on breakfast, and
pays himself first. That's right.
Pays himself first. Look, and there's okay. So the second thread I want to pull on there, just to wrap this up, is you talked about the miners getting you leverage to the gold price. That I'm pretty heavy there. Spent a lot of time there in my business. But I only go there because I've got the base of the pyramid fill, right? I've got the moat before I try to build the castle. That's the physical. Timely, because next week on this show, I've got two stock pickers coming on, Jeffrey Clark and Jamie Keach, who focus on super early stage gold and silver exploration development companies. So they're at the exact opposite end of the spectrum. And that's a great place to generate massive gains if you're incredibly careful and understand the risks involved. But I would say only if you've taken care of the first steps, which is to make sure that whatever happens in the high risk side of your portfolio, you're not going to get wiped out because you've got this stable asset foundation right locked in a vault somewhere. Because duration is what wins. I mean, you mentioned Rick. Well, he's been in the business for 50 years, right? Like Warren Buffett is Warren Buffett because for a number of reasons. One of them is that he's been an investor for over 80 years. He started in his teens. He's still going in his 90s. If he had started his investment career when he was 30 and quit when he was 65, he'd be worth less than 1% of his current net worth. And no one would have ever heard his name. He still would have made good money, but he wouldn't be the Oracle of Omaha. It's duration that wins. And so the only way you succeed in duration is by staying at the table. And physical is what keeps you at the table in that worst case scenario. Anyways, Andy, I want to give you the final word. Anything else you'd leave my audience with today? I really appreciate you coming on, sharing your expertise and perspective, man.
Pleasure is mine. Shout out to Jeff Clark, one of the best dudes I've met in this industry in 3 decades, and has my great respect and admiration, as do you and the entire Vancouver Resource Investment Conference. It's great to be here. I just will leave you all, I guess, with once again, with the comments made by the chairman of the Shanghai Gold Exchange in 2014. The Shanghai Gold Exchange will change the current gold market with its consumed in the East but priced in the West arrangement. And when China has the right to speak in the international gold market, the true price of gold will be revealed. That's not too far away. It's coming. And, pay yourself first. That's the best advice I've ever been given. Never miss an opportunity to pay yourself first, even if it means, paying $35 less on one bill so you can buy a 1 ounce silver eagle, because you're regimented and you're dedicated to your future. And really, we are accountable for all of our actions, Jay. And the most important thing maybe that we too often delegate to others authority is our finances and our future. So be accountable, listen to your gut, trust your gut, and pay yourself first. And that's the best advice I've ever been given. It worked for me, and hopefully it works for some of you out there too. And again, it's a great honor to be here. I will definitely be back next year in Vancouver. And anytime you need a little bit of a perspective from the retail industry in the United States, please color me interested. And I hope you and everyone else out there stays well. As the Chinese curse says, may you live in interesting times, my friend. And these are interesting for sure, brother. So you and everyone else out there, stay well.
No, man, I appreciate that, Andy, and looking forward to having you back in Vancouver in January. For everybody who tuned in, thank you. You guys are awesome. Love the chat. Love that you're here. This is a live show. We're back next Wednesday at 2 p.m. Pacific, 5 p.m. Eastern time. I'll be with Jeff Clark, the gold advisor, sharpshooter, stock picker in the silver and gold sector. Amazing guy. And Jamie Keach. He runs the Resource Insider newsletter. Same thing. He's all over the gold and silver market and has made me lots of money through my career. Do me a big favor, guys. We don't spend any money on marketing. We are all organic growth. So if you liked what you saw here today, share this video with somebody who you think might benefit. Share the channel, hit subscribe, turn on notifications. I'd love that you're here for the live chat. This video will be published tomorrow. So there's a 24-hour delay before it comes out again. So you got to see it first by being here live. I appreciate all of you. Thanks so much. And I will see you next week.